All right, everybody. Well, hey, we are excited for our first speaker today at Note Camp 2020 on day 2 here. Absolutely, this guy is brilliant with what he does. He is an active investor. He is the man at Rocket Dollar out there. We had him on the No Close Show podcast a few weeks back, and absolutely just loved his passion. What's funny is in the industry, it's a small space. All right, and we were talking about, hey, do you know? Oh yeah, I'm good friends with them. So am I. So Dan and I are like best friends, even though we've only talked like a couple times on each other for a few months, because we've got the same friendships out there. So our buddy here, Dan Kryzanowski, is an active real estate investor and fundraiser. He leverages checkbook-controlled, self-directed IRA accounts and SDIRAs and solo 401ks to create a diversified real estate portfolio yielding double-digit returns. And he is here to share with you how to take back your retirement accounts this morning. So good morning, Dan. We're so honored to have you today.
Awesome, Scott. So happy to be here, y'all. Thanks for being up bright and early. I know it's a Saturday. For some of you might be locking yourself in your closet like me from the kids. Well, happy COVID. Here we are. So,
and happy birthday weekend too, brother. Happy birthday. Cheers to you.
Thank you so much. I promise it's not a white Russian, but maybe it is. You tell me how this plays out over the next hour. But
hey, it's 5 o'clock. Summer is the weekend. God knows.
It really is. And
kicking our drinks.
As I like to say, Scott, I know I'm the appetizer here for, Carol Ellis and Brian Ellis. So folks, we're going to have a little fun with this. I hope you learn a lot, but I'd say the true experts, Carol and Brian in this space, you're going to gain so much from them. So, I know Carol is closing tonight. Brian is, that perfect 2 p.m. Sunday time. So, this is great, and it's as relevant. So as I said, be nice. It's the morning, but I really welcome the Q&A and the discussion on the side, and rock and roll. Let's get going here.
Let's get rocking. So I'll let you share your screen here.
Wonderful.
How many kids you got, Dan?
So we have 1 kid. So oops, let me get out of this real quick. Yeah, so my son turned 4 on St. Patrick's Day, which is always a lot of fun. So his favorite color is green, so God forbid we're out somewhere. So those that have kids and know PJ Masks, let's just say I'm cat boy. That's part of the reason why I'm wearing blue today, even though I probably look better in green. So
I got plenty of green t-shirts, so I need to know his size and your size, and I'll send you some great note investing t-shirts. How's that sound?
We will rock it too, and I won't share the brand. Actually, our friends at Pier Street had some great swag with green, so my wife even loves if you have a V-neck. So rock and roll to that.
Cool.
Awesome, great, y'all. Well, hey, Scott, just want to make sure everybody can see the screen, okay?
Yeah, we're good, man. Looks great, nice and purple.
Beautiful. Thank you. So, once again, folks, thanks for being here this morning. I didn't go crazy on the cap, so this is really about you. Here in the morning, and taking back control of your retirement dollars. Empowerment's big. It's always been big for me my whole life. Quick background, I'm from the Northeast. My mom was a social worker, bless her heart. My father was a high school principal. So doing well for others in education has always been my mantra. And I really feel education is the big piece of empowerment here. With that, I hope I can provide a few nuggets that will help you maybe think a little bit differently, and not just for you, but for those in your community, those in your family, to really take back control of your retirement dollars. So what's good to talk on today? The first, as Simon Sinek says, let's start with the why. So why is this important? And a lot of this I felt was important a decade ago, 2 years ago, but I think especially today. Politics way aside this morning. I do think the Wizard of Oz, the curtain has been pulled. And this is just one of many things for folks to really think and consider, as they move on to the next stage, of our life here. So I hope you feel that way with me, and thanks for joining me. The second is 21st century diversification. Our first kind of huddle group at Rocket Dollar in a tiny office in Austin, Texas, these words naturally came to our mouth, of how we viewed one should participate, and particularly with their dollars in terms of, life in the 21st century. Next up, I'll call it the solo K. I think Brian and Carol are going probably deeper into some of the products, particularly the IRA, but the solo K, I want to make sure folks are aware of. This is going to be particularly for any of my realtor friends out there, the 1.3 million of you. Anybody else that is self-employed, either by choice or maybe just doing some consulting on the side, this is super, super powerful. And even, my millennial and Gen Z friends out here, I realize a lot of things that you're passionate about, a lot of companies you may be joining may not have the typical 401k that some of us with a little bit of gray hair have had in the past. So you may be responsible for your retirement, and the only source of this to contribute may actually be doing this on your own. So I really want to make folks aware of what this solo K is. Next up, hashtag vote with your wallet. This is more of this will only be a slide or two, but more of my personal mindset, once again, way back before, but I think becoming more relevant today, and love to kind of get your thoughts, but show more so how this self-directed world really empowers you to vote with your wallet here. And then finally, of course, Q&A, and keep the questions coming in. If you say, hey, Scott, I want Dan to stop right now and answer this question, I will do it. If not, we will group up all the questions and get to it towards the end for the questions. And finally, of course, as any presentation, the fine print, I am not tax attorney, a lawyer, an accountant per se. So if I do have to push back a little bit or speak a little general on one of your questions, I'm happy to talk a little more offline, or maybe one of the other speakers today can get into it. So thank you for that. All right, so high level, I think you've heard this for years. I mean, those that we see on the TV and everything that's hitting, that scrambles our YouTube videos these days. The common question, how are you preparing for your retirement? We've heard this years and years again, but I think these are great questions because when you really step back and think about it, I think the three things that come out is, is my money working as hard as it could be? How much am I paying in fees? And then am I missing opportunities? So what most folks think, and myself included, the first question is, probably not, or it might be, I'm not sure, which is a total fair response. It's most folks, we've been trained and we do it on the set it and forget it. I think those days are over, and I think folks realize that. The next step, how much am I paying in fees? I'll be the first to admit, particularly, and I still have a small equity portion in my portfolio, it's no clue. It's so tough to say. For those that still get the snail mail prospectus that are about 40 pages thick, somewhere deep down it talks about what the fee is. It may be 20 basis points, it may be 40, it may be a full percent, which particularly say in a bond fund is going to crush your returns. So this is something particularly in a market, for our parents, or say the previous generation, or go back 2 generations, when you would find CDs at 5 or 10%, or even, constant double digits, folks don't really care about the fee or the potential fee. Now it can clip the equivalent of years out of your return. Finally, and this is where, I always like to finish with a yes, a very excited yes. Am I missing opportunities? Yes, I think so. And, the beautiful part of this, I think, as we're going to see, is a lot of these opportunities are right in front of you. And this is what I think is absolutely fantastic about the world of self-directed investing. So once again, today, this morning, all about you. Is your portfolio recession resistant? Now, I'm not going to go into all these questions because these are more, I'd say, canned questions, frankly, that a lot of advisors, a lot of large media share. And frankly, there's hundreds of them, and it could get confusing. And I'll be honest with you, the folks on the other side, a lot of my advisor friends would say, you know what, we really don't know. We know what's been working previously. We can give general guidance. I'll say this as a former employee of General Electric. Nobody in a million years in the mid-2000s thought GE stock would ever drop as much. Or on top of that, that there would ever be, any sort of questioning that the likes of a GE would have issues, with financial statements or maybe some funny stuff in the background. It was just such a, folks didn't even realize that this could be a possibility. And I still think GE does it a lot better than folks and great people that I work with. But high level, there was a significant drop for something that was pretty secure over time. So, with that, the one thing that I do want to point out, and that's why I underlined it, it comes back to, have investors, have, I'm going to call us collectively Joe and Jane America, have Joe and Jane America been able to access what the institutions, what the high net worth individuals, what family office have been able to? Legally, yes, for the past 50 years, you, myself, we have been, but it really hasn't played out that way. And I'll touch on that in a little bit. But, ultimately, I think the takeaway here is that, once again, part of what we want, assuming returns the same or with the same amount of diligence, you would like to reduce your retirement account, or frankly, any account, to volatility. So many case studies, so many headlines. You read about the gentleman that retired on February 28th, probably with a certain view of things. Within a month, the market goes down. I don't know him personally, but boy, I hope that he didn't sell when the market went down from 30 to 18,000. It's back up to 25 now. That's just a wild ride. That's pretty painful, as folks are either saying, I want to help fund my child's tuition. Maybe I want to gift to one of my grandchildren. Maybe I assume I'm going to live off this for X dollars a month that's going to pay out. So, with that, in the way that I always feel, how I can at least lower financial volatility, but also emotional, spiritual, mental volatility, is to invest in something or someone. Let me say something that I can see, feel, or touch. And then let's say someone that at least I know I can go to their house, or, if I call or text them, they actually will pick up. Awesome. So, we call this a problem. This number is huge. Your retirement money is stuck in stocks and bonds. And when I say I mean the countries. I'm not picking on anybody. I know it's too early for that. But the thing I really want to take here, that T is a trillion. So I spent a lot of time in Philadelphia. I'm originally from Scranton, PA. So yes, I've heard of The Office. It's a great show. And yes, please continue to support it and anything that comes out of Northeast Pennsylvania. But this is a huge number. T with a trillion, now we just see it in the headlines, but hey, a trillion is 1,000 times more than a billion, and a billion is 1,000 times more than a million. When you start thinking in these crazy numbers, this is the only number that can really stand up to our national debt. This is a huge number in IRA. So once again, what's an IRA? It's an individual retirement account. In layperson's term, this is your old 401k. So, Scott and I are here in Austin, and I like to say, if you worked at Dell for 20 years, you do something else, that 401k during your tenure at Dell is probably now in a rollover IRA. That's part of this 9.5 trillion, or let's round up and call it 10 trillion bucket. Behind that, there's another roughly 20 trillion of where you work currently, or stuff that you cannot touch for one reason. Once again, on top of that, there's TSP for the military. And then separately is the millions upon millions of folks that are self-employed. And I don't even know if that number has been properly classified, but let's just round up and say there's probably truly about 40 trillion that will come in play in the next 10 to 20 years. Now, with all that said, if we look to the left, there's this tiny, tiny slice of about 100 billion. Now, a lot of this, now once again, these have been around 50 years. So when you think of that, this is a real small number. I'd say the nice thing is year over year, this is growing. I think when we first put together the slide 2 years ago, it was in the 80s or so. So from a percentage way, the amount of money going in IRAs is growing exponentially. But, I consider this money sitting on the sidelines, or sitting in a target date fund, the year 2040 or 20 whatever, that once again, you probably aren't sure where it's going, what fees, etc. So as I said, this, in my opinion, I think is an issue. And if you kind of imply or look into some of the recent headlines over the last week or two, is money being spread out, quote unquote, evenly? I view it differently. Listen, I'm an investor here. So when I look at just the black and white numbers, I think there's a lot more opportunity at a lower volatility and higher return to move your money elsewhere. So I'm hoping, and I'd love to get your folks' opinion if you see it that way also. Next up here, Let me start with the right side. I consider this, you're going to get little pockets of sizzle. So sorry for my vegetarian, vegan folks out for the bacon reference here so early, but there's going to be, uh,
Bacon.
I knew I'd get you. At least somebody's on the call. Thanks, Scott. But actually, for fun right here, let's do a stretch, folks. Okay, who likes bacon? Type it in the chat box.
Bacon, yes.
Bacon, yes. And then,
Have you been to the donut place that does honey maple bacon donuts?
my wife would probably laugh at me. The answer is yes, of course. And I actually did that on our honeymoon. So,
Nice.
yeah. So, the reason why I can play Santa Claus, across the years because maybe I've imbibed in that place before. But
You know what? When they finally open up everything here in Austin after they hopefully drop everything June 15th, maybe we just need to go for breakfast and order a pound of bacon.
you know what? Hey, amen, brother. That sounds delightful for me. So, and then for my New Yorkers on the call, we'll call it a bagel with lox. So, all of that, and I actually think this is actually a really so. Folks, don't worry about the words. Let's just think about your brunch buffet, especially when you're out, at a nice holiday. To my friends in Florida, I think the last time I wore this shirt, I was in St. Pete Beach with the restaurant that goes in circles. And, my main point about this is that, I was kind of eating what you see on the right side, multiple different things that excited me, that gave me, imminent value, but I felt was the right thing to do versus, let's say, every morning you wake up and just have, a bran muffin and a glass of milk. I mean, you probably should throw some fruit, spice it up sometimes. So, bringing it back to, less edible things here, I'd say a lot of folks on the call, once again, maybe next time around we talk, we actually have a poll to go here. But Scott, if you wouldn't mind, I'd love to ping the audience. Folks, whether you're in retirement or your personal account, does anybody have any sort of asset outside of stocks and bonds? Do you have a rental property? Have you invested in a startup? Do you have any gold, crypto? Have you given a friend or that cousin, a loan for a few $1,000s? And if anybody has a quick funny story or something unique that they've invested in, I'll actually start my first investment, not in my retirement, but trust me, great for a tax write-off, was in a comedy tour, haha. So I remember sitting there with my wife in Dallas and said, "Hey, sweetheart, hope you enjoy these. If not, these might be $1,000 tickets." And, no surprise, the tour did not go as planned. So joke on me, but it was a nice little tax write-off. But anyways, on the flip side of that, I've also had things where I wrote a check and got a 30% return in equity on the back end with, frankly, taking 5 minutes of my time. So it's evened out pretty well. But yeah, I think next time for that pound of bacon, we'll see who has the best story coming in.
I co-invested in a wine bar in Marco Island, Florida for a year and made a pretty good return on it. Didn't have to manage it. When I was living down there for a little while, that was an interesting thing. I always wanted to own a winery at some point and looked at that stuff, but that was kind of, that goes back over 10 years ago I did that. So.
That's amazing. That's great. Awesome. Good stuff. Well, yeah, I mean, folks, the main point here is that, and listen, I'm on the other side of 40. I realize that I have the gray hair. What I want to share is that retirement, even, for our younger folks on the call, is not that far away. And, you yourself, your family, you're still the same person. You're still the same family entity. I would welcome you to not think that, I do all this stuff, actually very wise investments, with my piggy bank checking account, but my retirement, no, I have some advisor or I have to do the 60-40 and that's it. If you think about it, even when you play the numbers, that's probably not the way to go, in terms of diversity and frankly, how you're wired and who you want to impact. So, there's no reason, I'm just going to, for argument, let's just say everybody's 40, on the call, it's a nice round number here. You don't want to wait 20 years, say, okay, now I'm retired, I'm going to start taking out money and invest in my community. Or I'm going to finally help out that entrepreneur, and I might buy my first rental house. You can do that now. So, my point here is that regardless of what pocket of assets you're in, really think about the diversification. And, once again, with self-directed accounts, what you can do is real estate. I touched on startups, crypto. I'd say the one thing you cannot do is cannabis. That may change in the future. And the other thing why I underlined it is checkbook control self-directed accounts. And as this sounds, you have checkbook control. You have full access to your money 24/7. Historically, meaning for the past 50 years, um, you as an individual have not had checkbook control to your self-directed IRA. And the net effect of that uh, has been missed opportunities, a whole lot of paperwork, and frankly, some deals that you probably put aside because maybe you valued an hour of time with your family on a Friday night versus filling out some paperwork or being stuck on customer service. So I'm not poo-pooing it. I'm just saying a reality. If self-directed accounts were, as I say, quote unquote, country club cool, we would have, I wouldn't even be here today. But they haven't been. So, with that, uh, we feel the checkbook control is the most important component. And frankly, one thing that, whether it's Rocket Dollar or others down the road that you think about as one criteria of a type of self-directed account that you'd want to be in. All right. So probably like a lot of you folks, and thank you for being here today. A lot of our time the last few months has been educating ourselves. So probably sitting on some Zoom calls, some webinars. So I did my master's at Thunderbird out in Arizona. This handsome gentleman in the upper right, Vince Anabol, he's from Wealth Strategies Advisory Group. And this resonated with me so much, I just had to do some screen grabs. So, thank you, Vince, out there for this. But for folks that focus on our little niche space, this is a Yale endowment model. What I'd say though, is very representative of any large endowment, any high net worth individual, any family office out there, what they've done over the past, 30 years. So, what we have here in the red, and no surprise going down, is domestic equities, or basically think of it equity stock market in general. What we see going up and to the right is alternative investments. Now, what's amazing here is, right around 1992. So for those following the Michael Jordan, Dream Team Olympics, etc., that's when the paths crossed at about 40, or call it equilibrium percent. And then since then, alts have been about 4 times what domestic equities are. So basically let's start, what's an alt? So, an alt is going to be anything that I'll say does not have a CUSIP or is not traded. It's not a stock. It's not a bond. It's not a mutual fund or ETF that represents one of those. It's something that, is private, that you generally cannot do, whether you're on a Fidelity, a Wealthfront, et cetera, platform here. So, the big point here is that this isn't a catalyst of, 9/11 or the financial crisis or anything here. Those folks, and listen, I've been fortunate to speak and meet with a lot of folks, even in front of open doors. They'll say, actually my split's 90/10 or 95/5. And it's probably no surprise in why these folks, and the big reason is they're taking advantage on the tax side. So, with that, let's look at it a little bit differently here. Now, once again, this is an example. I'm never, going to say this is how the future is going to play out. But remember the 60/40, which, let me go back a few slides here, was the traditional stock and bond. If you've done that for the past 30 years, so this is going to be the, call it the tannish color, yeah, you probably doubled your money, let's just say going towards 2019, which is great. That said, over the past 20 years, if you went into alts, and we'll go into deep detail in the next slide, kind of what I consider alts and what they are, you're going from 10,000 to about 80. So, a few ways to look at this. First of all, just, the 80 or 90 numbers, 3 or 4x the 2025 number, but let's add an extra 0 on this and talk real. So let's just assume, once again, everybody was 40 years old in the year 1999 and you had 100,000. Well, okay, it'd be great to be 60 years old, have 200,000. Can you really retire off that? Even if you have other lines of income, it's a little bit tough. Let's say on the alt side, you had 100, you're up to 900,000. I'll take some liberties and round up to 1 million here. could you potentially draw that down and retire off that? In some parts of the country, yes, or with other income. But the main point I want to make here is that, uh, the nice thing now with crowdfunding and with a lot of these things used to be very exclusive and minimums. All of that, as I said, over the past decade, that's gone. I mean, something that a multimillionaire used to invest in, you can do it for as little as $1,000 on a crowdfunding campaign now. So, with that, fast forward 20 years, will we see the exact same split? Or I should say the delta or the 3X or 4X? Maybe, maybe not, but I do think it gives you that opportunity. And ultimately, I think if you invest in what you know, and I guess if you take anything away from this, it would be invest in stuff that you know or comfortable or a person that you trust and vetted. I do think you're going to see a pretty fair multiple or delta versus just blindly going into the stock market and funds. All right. So once again, folks, here's your pie. We gave you some bacon before. Here's a little bit of pie, and also shared by Vince. And I've seen different versions of this chart before, and I think this is really eloquent. So let me just disclaimer is, first of all, I would not recommend maybe going into 20 or 30 different things. In case you do this also on the side, or you're retired, or for one reason or another, this is a natural interest. Obviously, you probably don't want to go into 30 or 40 different things. That said, I think there's tremendous opportunity. If you can see the picture good enough on your end, a lot of the real estate here, some of them are just in red on the bottom: private equity real estate development, value add real estate. Up top, you get different things for folks that are a little more savvy with tax credits. Oil and gases. As I said, this can be endless, whatever we fill in. But, as I said, in the spirit of transparency, I'd love to share a little bit more on, my pie, what I've invested in. I'll actually do that towards the end right here. But the main thing that I do want to point out is you have a great opportunity with self-directed accounts, particularly a checkbook control with flat pricing, that for, a few dollars a month, still see me here, price of a latte or two, you can have a very similar sort of diversified portfolio. Multiple types of real estate, entrepreneurs, startups, crypto, a whole lot of private sort of lending that you can do, crowdfunding. Yes, likewise, stocks and bonds. There's definitely a part of that in the portfolio. But, once again, this is where I feel is the way to go. And there's some pretty easy ways, I think, to manage it. So as I said, before we wrap up here, I will be very open about what I invest in. But, once again, let's go back. So high level here with some background, as we kind of formalize this, and in full disclosure, I've had self-directed accounts for the past decade. And, what I've come to know in certain pockets, and this isn't a blanket statement across all of America, and frankly, it could just be called the 5% of us on the call this morning, and we want to buy alternatives. We want to be in notes. We might want to have a side property. We want to be an LP in a self-storage facility. This is how we're naturally wired. And I think folks, a lot of people of our other friends want to do this, but they really didn't know how. And then, on top of that, what pool of money did you have? I'm sure a lot of folks might have 2 or 3 kids in college. There's obviously other financial things to consider in this modern climate, but your IRA money you can't touch without penalty till you're 60 years old anyway. So it's been an awareness thing. As I said, these have been around 50 years. I joke that's why the folks in our little graphic here have gray hair. They wish they heard about it 50 years ago with the younger couple to the left. And then finally, it's been a pain. And I know a lot of us can probably sympathize with this being at home. But, who wants to spend an hour with, as you sign up for an account with somebody on the other end just for the sake of filling out their paperwork? Who needs to find a scanner and a fax machine, particularly in this environment? And I'm not joking here, folks. I mean, some of the other people in this space, the cat sitting on top, even the cat is bored, sitting on top of the books. It really has not been, easy to do at this point. So, as we see it, what is the solution? And, there's obviously a lot of technology behind, but we think it's pretty simple. And the tech really isn't that hard per se. It's nothing, it's not like we developed the internet here. And this isn't just for Rockto. This is more of a general statement, I think, for across the industry. But, the solution here, is to unlock that 10 trillion plus, to make people aware that, hey, folks, this has been around since the 70s, probably since, a lot of you, we were just playing in the streets. Maybe before some folks on the call were born. It's legal. It's not going anywhere. Trust me. Both sides of the aisle, senators take advantage of this. Politicians, the great story that I love is with Mitt Romney. Mitt was on the stump back in 2012, and Mitt's obviously a wealthy gentleman. And somebody says, Mitt, I thought that the max was $4,000 for a Roth IRA. I heard yours is $1 million. So Mitt laughs it down. Of course, a Wall Street Journal reporter in the crowd says, well, I got to look into this story. And Mitt not only had 1 million, he had 106 million. And he wasn't paying taxes on it because he did it from a Roth account. He took a few $100,000 in a type of self-directed account, obviously invested in something that was very lucrative, and on the back end is not paying anything. So, before Scott getting into more sizzle, is there any questions that you feel I should address now based on, either the alts, the history of the self-directed world? Or do you want to hold off?
You get a couple questions. Like people, Matrice asks, how often do you invest in startups for yourself?
Sure. Yeah. So writing a check, it's probably every 3 to 6 months. I'm a mentor at Capital Factory in Austin, Texas. So think of your local incubator. So at the very least, I talk in very deep detail to at least 4 startup founders, just sharing advice. And a lot of times I'm also a mentee to some of these folks. So I probably learn of 10 opportunities. I mentor on, 4 of them. 1, I get deeply engaged as a mentor. And then other times I get introduced. So I'll share a fun and actually a relevant example here. So there's a gentleman, friend of a friend of a friend that I met, was referred to, and he worked at big technology, and then he owned a bunch of chain restaurants for the last few years. So a really sort of unique career. And what he realized even pre-COVID is that delivery and these delivery apps, it doesn't really benefit a lot of folks. And here's why he said that. First, the restaurants get crushed, their margins, the fees are too high. Consumers are paying a lot. Like, you want a bowl of soup, you want something small. With fees and everything else, you might be paying $10 on top of it, all in. Fees, tips, taxes, not taxes, but everything else with it. And then, slightly disgusting part, what it's told is, 1 out of 3 delivery folks are dipping their hand in the bag. I don't know how true that is, but at least the perception of it. And, with that, particularly in a post-COVID world, a restaurant with their brand, they want to control it from A to Z, much like when you're sitting down in person at the restaurant. They don't want to farm it out to a third party. So this gentleman says, imagine if I can have some little clip, some RFID, some little piece of technology on your bag, or NFC, near field communication, meaning kind of phone to phone. So when your food gets there, this is the first time this is being opened since it left the restaurant. Likewise, let's just lower fees across the board for the consumer and the restaurant. So you might say, well, this guy's crazy. How is he going to make money? Well, the TAM, the total available market of restaurants, is about $1 trillion, 900 billion to be exact-ish. And, we would expect, particularly in a post-COVID world, probably about 250 billion with a B is the amount getting delivered. So if this startup gets even a slice of that, percentage, let's say there's $1 billion of total delivery. They don't even get a point. They don't even get 1% of the market. This could still be a very attractive startup here. So, from that standpoint, why do I like this investment? Well, as I said, the gentleman's been in technology for 20 plus years. And, I won't share names to give it away who it is, but super bright tech background, kind of a hobbyist on the side also. And he knows all the developers, everything behind this on the tech side to stand up an app in an appropriate way. The other side, he was a restaurant owner. I mean, for those of us that have invested or even worked in a restaurant, it's a different type of DNA. It's a different type of challenge that one must accept. So he's seen the inefficiencies so up close, and also this huge opportunity. And, and selfishly, maybe because as I'm getting older, but when I see entrepreneurs, in their 40s and their 50s, that's what I've invested with folks, as young as 20. There's a little bit more of comfort, particularly when they say, I'm going to put my $500,000 retirement in this, which, or maybe not as much that sometimes that's a red flag when an entrepreneur puts in that much, but, they're going to put some skin in the game. They're either in it to win it personally, or frankly, they're just taking their bet that they want this to work versus trying to go corporate for, say the final 10 years of their career. So that's just some insights of what I look at. And there's many things that I say no to. And ultimately, it's on a gut feel. There's a great gentleman, Jeremy Roll, R-O-L-L out there, professional investor, has been doing it 20 years. And he's a great checklist of 10 things that he systemically looks at for every opportunity. I don't know if my checklist is that systemic, although it probably should be. But there's, gut feel can never be discounted. So great question. Thank you. All right, Scott, you want to push forward?
Yeah, let's go.
Awesome, brother. All right, so here we go, folks. Welcome to 21st Century Self-Directed in the year 2020. Once again, for the last 50 years to sign up for one of these accounts, no joke, you needed probably a scan, a fax machine, filling it out old school, a lot of questions, maybe calling into a customer service rep that you would talk to once. That's what it took. In this period, I think since we clicked on this slide, we've already signed up for 2 accounts here. So, once again, and for everybody else that has been on a crowdfunding, using a Betterment or a Wealthfront, even a Mint.com or Credit Karma, it only takes probably a minute or 2 to sign up for this, for any sort of account. And this is frankly our expectation. And you want to be able to do it from your phone, from your desktop. That was the spirit that we saw at Rocket Dollar, and we feel frankly where the world is going. If somebody has to take an hour plus, frankly, if it's not your will or your trust or something like that, you really don't want to do it. And a lot of people may have stopped from opening these accounts. So, at this point here, I think we've already opened 5 accounts. So let me move on to, this is where I think the rubber meets the road. Once the account is open, how are you going to fund it? Once again, it's been heavy on paperwork. I've had these accounts, not at Rocket Dollar, but other places for the last 10 years, heavy in paperwork, a lot of back and forth, not only for you, but also the deal sponsor. Giving a very real example, I have a good friend, he flips houses in North Carolina. It's a great return. He's never missed a payment in 15 years. Guess what? With a custodial, kind of an old school self-directed account, if he says, hey, Dan, do you have an extra 10 or 20K to put in for 3 months? It's easy money on the table, but if he and I are both going to be stuck on the phone for an hour with somebody, with a custodian, it's really not worth it. Whereas here, as I said, this is just some patent pending technology in the background. But the main thing here is that you have full access with the checkbook. It's just as easy as writing a check. So however you would invest with your piggy bank checking account, you can now do with your retirement.
One of the things that we asked, Dan, I want to throw this in because it probably add a little stuff, is for those that filled out the attendee survey, over half of those that are on here, especially all supposed investors, over half don't have a self-directed IRA right now.
Wow. Well, that's great. No, and thanks for everybody for joining. It's really humbling that you're with us this morning. And I would say 2 things. One is, you look at, I think, pricing, the level of customer success, the checkbook control, I think, are 3 things that to all take into account as you're shopping for these sort of accounts. And then secondly, for folks that may have been stuck where it's a per transaction and asset under management grid, I would challenge you to look to a flat pricing model, particularly for the cash you're sitting on, to shift from one self-directed IRA to another. Or if you have that self-employed portion, which we'll talk on in a moment, that you could go into a solo 401k. And also share some resources towards the end of the call. So, finally here is, how do you track your investments? Let's say you invested, as the dividends or the payments are coming back from a note, you want to go into a bunch of crowdfunding. This is a great way to do it. So, once again, we and nobody else in the space could or should give formal tax advice, but there's little things such as if your account balance is over 250K, you need a certain form, filled out on tax time. These are things that we just guide you. So we want to keep it easy. Everything is in the same place. God forbid something happens to you, or maybe you have your spouse's account that you manage also. This is just a very easy sort of clean way to do it here. So, with that, before going into the actual products and the detail, particularly for half the folks on the call, why I love this. We 6 months out of the gate, we spoke to 10,000 people and were voted basically the top startup in the world. Till Shaquille O'Neal swatted us down to second back in 2018. And the big reason is we said, hey, folks, these accounts are about no taxes when it really comes down to it. And, ultimately, yes, the government's going to get their take, but these accounts either allow you to defer taxes for decades, or on the flip side, think of the little seed versus the big tree analogy. Would you rather pay $10,000 in a Roth today, taxes on that, versus 100,000 in the future? So this is a great thing that self-directed accounts offer you, particularly the solo 401k, that you can have a pre-tax portion and a post-tax all under the same umbrella. So with that, and I'll apologize a bit for folks that have an SD IRA, but I'll go through this a little bit quicker. But for folks, new to the self-directed world, the gate array product, as I call it, is the IRA, the SD IRA. And this is going to be very similar feel to your traditional IRA. I'll say, quote, generically, your Fidelity, meaning in terms of you have the 6,000 or 7,000 if you're over 50 a year to contribute. But the difference in a self-directed world is going to be the ability for what you invest in, as we talked about, real estate, startups, etc. And then the control of it. So from a dollar perspective, I would say, these aren't magical accounts. You can click your finger and say, I'm going to put 100,000 in tomorrow. It's not like that, but you still have to abide by IRS regulations, but it's more what you can do with it. And for folks, relatively novice in this space, traditional just means pre-tax, meaning you haven't paid tax on the money yet. Ultimately, when you withdraw the money, you will, either in your 60s, or I think the new mandatory age is 72. Roth means that you have already paid money on the tax. And just a little caveat, and I'm sure Brian and Carol will talk in much detail, if you have a Roth IRA and you want to move to a self-directed Roth IRA, that is the only avenue to do so. Whereas with traditional pre-tax money, that can go into different products. One of which is right here, the solo 401k. So, once again, the eye test, these slides look really much the same because yes, you can do what you want with the money to invest in. Once again, what you cannot do with these accounts, no life insurance, no collectibles. And the big thing is not yourself or your linear family, meaning you cannot invest in your own startup, or you cannot buy a flat and have your children or parents or even you stay in it. Everything else is in play. So this is fantastic for passive investments. The solo 401k here, and let me just push on a little bit. The big takeaway has been what you can contribute. So, and that's not, guys, this isn't a typo here. That's not an extra zero. That's $62,000. And if you're a husband-wife team without W-2 employees, you can multiply that by 2. This is a very, very, very powerful account for anybody with qualified self-employed income. And what that is, in a very non-technical term, the government says, are you, quote unquote, doing stuff? Meaning, are you a consultant? Are you, you manage properties? Are you even an Uber driver? Do a healthy amount of gig economy on the side? General rule of thumb is, do you receive a 1099 from somebody else? What it is not qualified, day trading, collecting a rent check strictly, unfortunately, is not considered qualified income. But listen, there's many things that one can do, and you don't have to have your own LLC. I mean, you can be a sole proprietor in this. My wife teaches Spanish on the side. She would qualify and will be able to put all that money into this account. So it's extremely powerful. What this is doing, it's giving you the ability, much like your friends in a W-2, that first, 19,000 you can put into the account, and then 20% of your net earnings. So let's just use a round number. Let's say you're a consultant on the side, made 100,000. you can do the 19,000 plus 20% times 100K to the additional 20,000 to get 39,000. So once again, very powerful account. It gives you a 10x ability in the amount of dollars that you can contribute. So, here's another way to kind of look at it. And this number goes up every year. The 62 I alluded to was for folks that were 50 or over. It's 56,000 for folks under 50. General rule of thumb, it goes up $1,000 every year. So if we look at the left here, I mean, these are huge numbers, folks. Particularly if you kind of have to play catch up, you probably want it. And just to be clear, for folks that have a small business, as much as you love your employees, it probably does not make sense to have 1 or 2 or 3 W-2 employees. Why? At least for this argument, that line of income would not qualify for a solo 401k. So for folks that might be going into business or, thinking about, should I put people on my books full-time? General rule of thumb that I have, either it's yourself or yourself and 20 full-time employees and nothing in the middle, just all the pain points between the healthcare and everything else. But this is also another reason for your retirement. The second bullet here I really want to talk about is the ability to take out a personal loan. So let me be clear. You can have self-employed income, contribute 0, but then roll over X dollars from your previous 401ks. So, very real example, I work big companies. My first decade, I might have a few $100,000 on the side. I choose to roll 100,000 into the solo 401k. Once again, no tax penalties, nothing else. But the nice thing here is you can borrow up to 50,000 or 50% of the plan. So as long as you pay it back over 5 years. So, you can go on vacation, buy a car. That said, a lot of folks might use it to better their home. It might be a quasi-emergency. I think a great scenario is you see the entrepreneur that says, I need to raise a little money, but I don't want to go to friends and family yet. Or if this doesn't work out, my spouse is going to want that I get a W-2 job in a year or two. So they borrow the 50,000 and you're paying yourself back. And for the real savvy folks out here, realize this is a good way to boost up your retirement dollars. You generally pay yourself back prime plus 1, let's call it 5%-ish. You're paying yourself back. So it's a very low risk strategy to get access to your retirement dollars. And with the current environment we're in, that's actually been doubled up to 100,000. So I won't go deeply into the CARES Act and how things have changed, but it's basically favoring you, particularly if you're self-employed. Brian and Carol probably talk on the mega backdoor Roth. I won't get into that, but these are just huge numbers you can contribute, particularly if you quote unquote need to catch up in your 50s. This is just a dynamite way to do it. So, Scott, any questions up on this point, kind of on the inner working?
Yeah, I was just jumping over there. So Allison mentioned, she goes, Allison says, what if you are 60 or 70 years old, but you own an LLC that has rentals in it?
Yeah, great question, Allison. Thanks so much. So not as much the age, but once again, from just owning the rentals, it's unfortunately, the government does not consider that quote unquote doing stuff. So rent check, day trading, capital gains, that is not considered self-employed income. Now, that said, let's say you actually manage kind of independently some properties. You always want to be careful with your own property, not knowing your full situation. I don't want to speak too much one side or the other, but let's say properties that you don't own, you actually manage, you clean, this is your side business, that income would A, qualify you to open a solo 401k, and then B, let's just say you made 10 grand a year off of this, you can contribute the 10 grand if you choose.
Mm-hmm. Question, Jerry asks, what if you're already retired? Are self-directed IRAs necessary or of any benefit?
Yeah, good point. Like anything, so I'm going to assume by retired, you mean over 59 and a half, over 60 years old. Once again, it's from a tax deferral sort of perspective. So let's just say, Jerry, you're 60, you made, let's just use round numbers, 10,000 here. Do you want to pay tax on that today or not? Or do you want to defer it? So, I think there is some opportunity, like anything in the big picture of your portfolio, what you need. The obvious thing, Jerry, is what you're in. If you need or you have the ability to pull the money out, or let's say you're getting round numbers here, 10% dividend payment every year, you want that $1,000 dividend to come out. For say maybe versus when you were 50 years old, you're not paying tax on it. So I'd say look kind of across your full portfolio what you need access to, but No, there's definitely some benefits, and not to be, but obviously we all know death and taxes. So, to the former, I know there's also inherited IRAs and stuff. So, if that's something that you feel called to do and it makes financial sense for you, also, even at a post 60 age, you may want to stand up one of these accounts for the purposes of it being inherited down the road. Once again, everybody's situation is super unique on the call. But short answer is yes, there's still benefits. And I'd say at Rocket Dollar, we've had folks from 18 up to, I think the one gentleman was 92, that opened an account. So you do see, I'd say a very wide range out there.
All right. So Scott Brown asked, what's the difference in a solo 401k versus a SEP IRA? Do they not do the same thing? The SEP can be converted to a Roth, right? How about the solo 401k?
Dynamite question. They are very similar, particularly in terms of the high contribution numbers. One of the differences is what you can invest in. With the solo 401k, you get more opportunity to invest. And, depending on how the SEP's structured, you may need two unique accounts for a pre-tax and post-tax. Whereas with the solo 401k, under the same umbrella, and I'll talk about pricing structure in a moment, but you can have a pre-tax checking account and a post-tax checking account. Now, let's just give an example. Let's say, I'll even use my personal example. I worked big company. I left big companies. It turned into a rollover IRA at Fidelity. I wanted to move that money to my solo 401k. I transferred it over. Once again, no taxes, no fees, et cetera. And that 100,000 sat in my pre-tax account. When I found a startup that I liked, I did a Roth conversion. So at the end of the year, 1099-R needed to be done for $10,000. So meaning that I will pay taxes on this $10,000 amount that I moved from the pre-tax account to the post-tax account. That said, of course, this is one of my startup investments. I hope becomes the next Facebook. So when I take it out, I hope that 10,000 turns into $1 million, in 20 years. So I don't have to pay taxes on the back end. That said, you can't go Roth back into non-Roth money, but it's literally as easy as a click of the button when you have checkbook control, access to your money.
Nice. Let's see here. Question. Jerry, who asked the previous question before that one, was like, okay, I should also mention if over 60 retired, but working on a 1099 for over 150K.
Yeah. So let's assume Jerry, assume you're a consultant right now. You're also not working a double W-2. So let me just caveat for everybody out here, you cannot double dip. So let's say you work a W-2 job and you already maxed out your 401k. You cannot do that with your side income. Second scenario, very similar. Let's say that you only contributed 9,000 at your day job. You can then do 10,000 from your self-employed income to add up to that 19. So or actually if you're over 50 years old, it'll be a little bit more, but my point is that you can still get to the 19 or, whatever the number is going to be for folks over 50. Yeah, Jerry. So yeah, you still have that, I guess, when you're just back on the napkin. Once again, this is net, so not gross earnings, net earnings. You can do there'll be 25K because you're going to have your extra 6,000 that you have the ability, and then 20% of the 150, the 30. So quick, if my numbers are hitting me here, 55,000 you'd be able to contribute. And final point, I would say once again, a husband-wife team. It might be same sex in some different states, but basically, it's you and your spouse without W-2 employees right off the bat. Let's just say you made 50K. You and your spouse, if this is your only earning, can both do the 19,000. So it's extremely powerful, that folks that are self-employed put their spouse on the books for this purpose alone. So that's something to think about, particularly even if you're in a real stable, one-man or one-woman accountancy, consultancy, et cetera, that you may want to consider putting your spouse on the books. I mean, it's, almost like I don't say a free 19,000, but it's a very easy way to contribute 19,000 and defer it.
Sri asks, once you contribute to solo 401k for 2020, are you required to contribute the next year?
No, great question. The answer is no. And what I would say, let's say if you want to benefit in 2020, you would have to open the account by 12/31/2020. Now, you don't have to make the contribution till normal tax time, say April of 2021, but the account has to be open by the end of the calendar year for the year that you want to benefit. That said, you can also open the account and never contribute anything. Now, the spirit is that you always have qualified self-employed income. It doesn't have to be a lot, but if you're, you drive Uber around the block once and you're going to W-2 the rest of your life, A, I would not suggest doing that, but B, by the second or third year, you would have to shift your solo 401k to an SDIRA. That said, if you consistently do consulting on the side, for example, and you make even 5 or 10K a year, you can keep this account open as you should, because you do have qualified self-employed income, indefinitely.
Cool, good stuff. Matrice asked, what is a crowd fund? Can you explain that a little bit more, what a crowdfunding platform is, or crowdfund?
Yeah, so, basically it's the ability for you to be a partial owner in an asset. So whereas before, just think you and your buddies, some of my early investments pre-crowdfunding say, hey, we're going to invest in a bunch of bars and restaurants here in Austin. Great. What it is now, it's a more, I'd say, formal system. So you might see, let's take Acre Trader if you want to own a piece of a parcel of land, an almond farm in California, something else in the Midwest, you can go to the likes of an Acre Trader and say, hey, do you want to own an acre of land for $4,200 and it'll pay this return? There's other things out there, Nextseed based out of Houston. Do you want to be an owner of a restaurant? The minimum might be $500 and they'll give you a bunch of perks. And also a lot of, I'd say, smart as an investor crowdfunding would be where you have, you're getting the top line revenue. So I think what I heard, I think this is a truth, Steven Spielberg would take $1 off every movie ticket in the 80s, right off the top. So he knew he was getting paid. So, like anything, read what the terms are of the crowdfunding. Even Rocket Dollar, we did one, of course, because by default, if you're going to be a crowdfunded investor, you're going to be an alternative investor. So I think had ours as low as $100. So somebody say, hey, I'm an investor in this. So, as I said, there's many ways to spread out your portfolio or access, or sometimes, particularly if you're supporting your local community, A, it's going to help the restaurant, the local entrepreneur a lot. And then B, you're probably going to get a lot of perks. So, that's something I can talk on in great detail. But like anything, do your diligence. And even nowadays, is there a net benefit? So when the world opens up again, by being an investor, do you have access, say, if you do lunch and learns, do you have free access to a conference room, the equivalent thereof at a bar restaurant? That might be worth more than your investment itself. So there's a lot of fun things to look into on the crowdfunding side.
Cool. Got a few more questions. We'll bring those up at the end.
Sure. Sounds good. All right, guys. So once again, this is I guess the final lie test. And this is not some, horrible thing that, on the right side that I did during quarantine or that I had our intern do. And I even get dizzy looking at it. So let me just stop it here. What you see on the right is frankly how the industry has been the last 50 years. As I like to say, this is definitely not country club cool in any way, shape, or form. It's a headache. Even me looking at it now, I get sick to my stomach. It's just so many little things. And outside of our health, of course, time and money are our biggest assets. So, Rocket Dollar's view, and there's a few others in the space that keep it real simple. It's like, hey folks, here's your one-time sign-up fee. Here's your monthly. And then, on Rocket Dollar's checkbook side, I think the only common banking fee one may incur is if you wire money, say over ACH or an old school check. That's it. Everybody else out there has all these little things. It just doesn't make it warm and fuzzy. And then on top of that, it's probably going to cost you twice as much. And then on top of that, you're probably going to do, an extra hour every time you want to make an investment, which is just a comical kick in the face when it's your best buddy across the street that flips houses that you want to invest with him or her every 3 months. So, we've also said, listen, let's keep it, big and bold. Your money comes out of the credit card also, meaning your fee, meaning let's say you have a Roth with exactly 10,000 and,
Did we lose Dan? Can you guys hear me? Okay, good. Yeah, we lost you there for a second, Dan.
That's all right. So just to sum up on that, I said, whichever provider you go with, I don't think you want to deal with the small print. It's just not worth our time and effort these days. And these are dynamite questions, folks. So thank you. And just a few more quick slides and we'll hop back into the Q&A. Resources, a lot of these great questions. Our knowledge base was actually voted one at top of the world. It's our FAQ, rocketdollar.com/learn. Everything that I've shared goes into deep detail with graphs, everything else. We've talked to all the legal deals in the space. It's of course free to access. Even just take a moment. I mean, and if your question's not there, go to our chat, email our customer service, and if something relevant, we'll add it. We like to talk real stuff. And as I said, this is all about you folks, your retirement dollar. So that's why we called our blog Rocket Your Dollar. Literally, that's what it made sense to call. Probably about 50 different podcasts. We're going to get the likes. I think Scott was kind enough to be a guest. A few other folks that raise money from the investor side, from the influencer side. On our blog, we've kind of opened the kimono to share what we've invested with personally. For some of our sponsors out there, we also have done different sort of webinars. We're not going to get into on this, but for those that raise money, let's say you're just doing a small syndicate or any of my startup folks, and I imply there's a few out there, all I would, welcome you to do is to inform your audience, say, hey folks, did you know you can also use your retirement? I've seen people that have done this, that educate their audience. They literally, as I call it, get 6 figures in 6 minutes. They take 5 minutes to send the email or to add it to their slide deck, etc. And then they're just collecting a check. In all honesty, real estate folks that have on a regular basis inform their audience of the self-directed accounts, they get about 20% of their raise done, which by default, you get more money from less people faster. It's really, really, really powerful, particularly to take back your time. And, I said the final thing is your best buddy might have, down here in Texas, a child at Rice, SMU, UT, but they worked at Dell 30 years. Well, they can't touch their liquid account, but they can tap into that, old Dell 401k. And that might be the only way that they can invest with you. So just keep that in mind. The affiliate program for folks that are maybe bloggers out here, like I said, an example, white coat investor, which no surprise, it's doctors that invest. Let's say if they mention Rocket Dollar on their blog, you click through there. I think white coat investor will get, $50 or $100 depending on the relationship. Also, anybody that is an active blogger, Nurses on Fire, West Coast Nurses, I've been a guest on them. I know there's some great stay-at-home folks that have dynamite blogs out here. Get compensated for it, particularly if you are this topic resonates with you. This is something very quick to do. Basically, you sign up, you get a link, you hyperlink it, and if somebody clicks through, you get this done. I know a gentleman that kind of advises on 21st century diversification. He's easily made into the thousands, on the affiliate side for something that he would naturally want to talk on anyways. And then finally, we have a newsletter. And then also the ability, as you saw before, some of the sizzle to sign up, just rocketdollar.com/sign up. So, with all that, I disclaim again, we're not tax, legal guys, accountants, etc. But we've definitely, I think, have put in the time and effort to make best efforts to educate folks, on this world here. So with that, just to close real quick, so this is more on a personal side, but this has been my mantra, for kind of my whole life, I would say, not strictly on the financial side, but, where you're going to spend your time and energy and who with. But I think it's very relevant, and especially more for corporations, proof's going to be in the pudding where they put their money, but also individually, as I said, taking all of the, say maybe personal benefits, the emotional side, the political side way out of the equation. I think there's tremendous benefit to vote with your wallet. As I shared before, and I'll be brief because I really want to get to the Q&A here. What I've done with my retirement dollars, a whole lot of real estate, notes, hard money loans on residential, multifamily equity, multifamily debt, industrial, last mile. The view is, this is what I'm most bullish on now in 2020. The view is, well, Amazon can't deliver everything to your house, or at least not yet, we hope. They're not going to deliver 100 pounds of wood. You're going to have to go somewhere. That seems like a pretty safe piece of real estate, particularly say in a Dallas suburb, a Houston suburb. People want to work on their house. People need to at times, just with that. Wouldn't it be great to get a 7% return on that? It seems for me like one of the, I don't want to, recession resistant, very low risk, just stable. It's a beautiful thing to see that dividend check hit your account every month. And to get your, not just ROI, return on investment, but also return of your investment, the other ROI that frankly we all want, which I think makes real estate so attractive. Outside of that, once again, this is just me personally. I've have had tremendous success investing with female entrepreneurs, women of color. It's been probably double some of the other returns that I've received elsewhere. Like anything, I super qualified with certain loans. I've made personal loans. I've had them price collateralized to the person, their business, something else. I half joke, I think way back when I gave my sister a little loan and I put her cat as collateral. So I'll just say it's the last time she wanted to do business with me. But, my point is, like anything, vet who you are, go with your, it's always great to look at data, always go with your gut feel. You know, doing private lending, you may want to talk to a lawyer first, just how to draw it up. Don't play lawyer if you're not a lawyer, I guess is another takeaway I would suggest. Finally, for call it, I joked a little about the comedy tour, but we've done bar restaurants, sometimes where we own the dirt underneath. Sometimes I know the investment probably wasn't going to work out, but I've had in kind, as I said, the ability to use space. For all of my singletons in their 20s out there, if you can get half price drinks at some of these places, it might be great to be a crowdfunding, sort of endeavor.
Yeah.
Yes. So, with that, there's a lot of cool things. And yeah, I just smile, as sure Scott does, about some of these crowdfunding things. I think the one thing that all of us at Rocket Dollar, when it was $500 and they gave us a bottle of vodka, half price drinks, event space, you're like, wow, this is great, guys. I mean, I hope you do make money now. Yeah, it was kind of a great thing to go into. And yeah, as I said, there's just a lot of things that and frankly, I use my real estate, and as the dividends come in, that's where I consider, some of my more startup-y investments. A great company here in Austin called Blended Sense. I don't want to use the acronym BS because it's actually dynamic stuff, how they make you look pretty online and really help with kind of a video for you to share your message. I was just with the founders again last night. They were voted one of the top startups in Austin, which validated my investment. It was after I wrote the check, but I just had such a great feel about them. So, any folks doing things on the side, I think for something as cheap as $100, they'll make you look good. And that company's Blended Sense. On the real estate side, these are just some local shout outs. I haven't invested, but a company Real Quick, REALQUIK. So if somebody's not as savvy in marketing, this is more for the residential realtor, I might want to check them out too. As I said, these are just things that exponentially that I've either supported either with, actual money, or as I'm doing here, just kind of sharing, because I just believe in the person. I believe in the tremendous value they can provide their audience with that. So, I feel I try my best to vote with my wallet and my time. And, at least with self-directed accounts, you have this great ability to really, participate with that. So, a final thing that just to share here is, I guess, summing up is, so what do these dollars do? If we think back, we talked about, the big 10 trillion versus 100 billion delta. Here's an example of Tanya. So she had some money, was sitting in some target date fund, not doing much, getting gouged with fees, and she learned of a house in San Antonio. She purchased the house, she put it up for rent, and then this family from New York came down. And they were able to find it easy, find a beautiful property, very well maintained, continue their family there. One of them had a business out of there. The other one, would frequent the local restaurants. So, what we've seen from this is that, Tanya, who we put in the green, she's getting this great IRR, versus before, and she's not paying taxes on it. Hugely, hugely beneficial. And then Tanya realizes she can do other properties that are probably going to get her double digits. So don't really look into the IRR. I would say the no taxes is the relevant point to share. But on the flip side, realize on this community, here's a family that came down. they have 2 new jobs going into the community. Their children are participating. They are recycling as small business owners within this micro community. Their money is spreading. And the reason is because they're moving into a house. When they move in, they have an owner that takes a lot of pride in this asset at a fair price, so a family can move on and then share in the community. So for me, this is kind of the beautiful story, and how I think self-directed accounts, you can significantly impact a community or your community with your dollars here. So at the very least, I hope that this is something to consider, because I do feel across all walks of life, your personal pocketbook, your ROI, but also your micro communities, you can provide great benefits. So with that, huge thanks to everybody. I joke around, if you can spell it, you can get it. So D Kryzanowski, and hopefully we show this in the call notes, but I'm from Philly, so $100 off if you can get it. My email, real simple. Mark Peck, my colleague, who unfortunately couldn't make it, he said 10 times handsome, 100 times more smart than me. He's been in the space for 10 years on the self-directed side. That's his actually direct number if you really wanted to talk in great detail. Likewise, feel free to reach out to me, email or LinkedIn with any sort of questions.
Good stuff. Good stuff. Got a couple comments here from people.
Okay.
Mike asks, how do you guys make sure all the IRS rules that custodians must comply with are complied with so that we don't get dinged on a technicality?
Yeah, great point. So, I think the one benefit for us is, if you do take, I would first, suggest to take a moment or two to, view the knowledge base. Secondly, on the front end, on the sales side, we'll be very clear. Like if you mention cannabis, we're going to say no. If you say, hey, I'm going to do this strictly for my child, we're also going to say, no to that. So we're very up. And likewise, somebody says, hey, I have qualified income, and you sign up for a solo 401k, 2 a.m, you go and sign up because it only takes 5 minutes to sign up. Great. Okay. Now, but as we go through, we might hear, well, this is only coming from a rent check. You actually don't, quote unquote, do stuff, before we go through and finalize your account. We're going to, reach back out to you to say, I think you should be in a self-directed IRA. That said, I said, looking at the data, just take our first 1,000 plus accounts, first 100 million plus of assets that can buy. Nobody that we know of has gone into the gray area. So it's the analogy is very similar to a health savings account. If you break your arm or your kid breaks his or her arm, you take them to the ER. If you go for a manicure, pedicure, you're going below board. Same deal here. I think the rules are very, very clear what you cannot do, which makes it very easy to know what you can do. So we feel a lot of folks, recognize that. And as we've seen, they've abided, probably, for X thousand of the transactions, they've abided by it.
Okay. Tamara asked a question. I plan on opening a self-directed IRA this month. She says, I've been researching and talking to a few companies to determine fees, services offered, et cetera, for the past few weeks. I have a couple of questions. Who regulates Rocket Dollar and the other self-directed IRA companies? I know you have to be approved by the IRS to be custodian, but is there any industry oversight? There seems to be a lot of new companies popping up. What happens to our funds if a custodian goes out of business? And what should we look at? What questions do you recommend ask to determine what companies to consider?
Yeah, dynamite question. So right off the bat, like anything, I'd say if some of these companies are not upfront and personal on what their pricing is, stop. If the other thing says, once you sign up, you have to do all of this stuff, like you have to find the checkbook portion or find where you put your money, stop. Don't even spend more time there. Secondly, is your money with ours is with an FDIC insured institution. So just like any account, it's FDIC insured. The first question we wrote on our knowledge base, or FAQ, let me go back to the resources here. The first question that we said was, what happens if Rocket Dollar goes out of business? And, A, your money's insured. B, we do have custodians in the background. Legally, we have to for the self-directed IRA. So you basically would have your relationship there. And then, worst case with the solo 401k, there's another provider that you would have to, let's just say there's a few background things that we have to do annually that they would do for you. And with our size now, we're a known entity, we're an attractive portfolio. But yeah, the main thing I think is just, how has somebody been around the block and done this? Or are they just going to say, great, we kind of did stuff for you, now you have to figure out the rest? Or every time you call us, every time you want to make investment, you have to call us and we're going to nickel and dime you, et cetera, et cetera. So that would be just some of my guidance. And I think these are great questions for Carol and Brian also.
Yep, great stuff there. And then somebody asked first on, can I use self-directed IRA to buy notes? I've been told I can't, or non-performing notes. And the answer is yes, you can use a self-directed IRA checkbook access. The biggest thing is you just can't be doing the workouts or the collections yourself. That's why you would hire a third-party servicer like Madison Management to handle the workouts, the collections, the call-outs, and then they will be sending in the money directly to your self-directed IRA account. So yeah, if you missed that yesterday, that was one of our first sessions of the morning, I'd go back and watch that right off the bat. But yes, plenty of people are using their self-directed IRA, checkbook access, their solo 401ks, solo, self-directed SEPs, all that stuff to buy non-performing or performing notes, as long as they're using third-party servicers and legal to help you with your, so you're not self-directing it basically yourself.
Correct. Mm-hmm.
And then Montreese says, I currently work for a general contractor and I do a lot of estimates on the side. Can I open an account or will I have to establish a company first? You can open an account as long as you're getting, you're getting 1099. It sounds like that, Montreese.
Yeah, I'm with you there.
Matrice asked a question. What's the main difference between your core and gold service tiers?
This is fantastic. And I'll actually just text it in the box here. So, to our knowledge base, and I know actually, Scott, if it's okay, I'll take back the screen just for a quick second here.
Yeah, go right ahead, bro.
So, boom. So this is our knowledge base right here. And what was the answer? So what can I help you with today? rocketdollar.com/learn, and then core versus gold. Boom, there you go. What is the price difference between Rocket Dollar, core, and gold? Right off the bat, we're very transparent. Just for reference, for folks not familiar with the space, this is probably about a half to a third of everybody else out there when you look at it, assuming you're going to have this account for 5 or 10 years. And in reality, you probably have these for longer till you take out. The big difference, I'd say, why somebody goes gold is either they need it expedited, or let's say you own a house and you want kind of the old school checkbook, and that's something you want to customize. We do that. Likewise, somebody says, every quarter I invest with a buddy and I like to wire. Well, as I said, the only probably common banking fee that Solera would charge our banking partner is the wire. So, the gold comes in with, here's all the bells and whistles here. I won't go through, I'll let everybody click through, but this is helpful. Like the 1099-R, we talked about the Roth conversion before. If you want a debit card, a checkbook, let's say you own a house, you're active in that. For one reason, for privacy, you want a custom LLC and, expedited service, et cetera. So as I said, this kind of came through, I think, the first 30,000 or so calls that we've had and, first 1,000 plus accounts. And this is what our customers and our audience wanted. So that's what we have here.
Good stuff. What are the questions, comments for Dan here, guys? Thanks for creating that $100 off, man. We definitely appreciate it there for you. And I mean, the resources there available. I mean, we talk about marketing. Here's a way to sign up and have a self-directed IRA. It could be an affiliate for you guys.
Yeah.
That you're promoting and got some great resources there for educating your audience, your followers, and it's a great way to kind of start out as an expert without having to be the expert yourself.
Rock and roll. Yeah.
Cool. Any other questions for Dan on this Saturday? You got big plans today, Dan?
Well, we'll see. We had pizza and beer because I grew up in the Irish part of an Italian town. So every Friday's pizza and beer. My son knows. And I say, what's today? He said, it's pizza day. So that was pizza day. And, maybe we'll have to shift to ice cream. So, I'll be needing a toothbrush come Sunday, but, a lot of fun stuff there.
That's great stuff, man. It's awesome. Well, man, thanks so much for coming on today. Thank you so much for sharing so many great things. And once again, guys, if you have some more in-depth questions, always feel free to reach out to Dan. He provided his email and the phone number there. You can reach out to Rocket Dollar. And of course, check out the podcast as well, man. You guys have a lot of great stuff on there as well, too.
Thanks so much.
Perfect. All right, guys, that is going to wrap it up for the first session here on day 2. Thanks, Dan. Be safe. And let's get together for a beer and pizza sometime soon, hopefully, right?
Rock and roll. Take care, y'all. Thanks so much.
Yeah, thanks, bud. All right, guys. So that's we're gonna take a quick little break, about 11 minutes here before we bring on our next speaker, and Mike Wolf, talking about tax liens, tax deed investings, and overages. So don't go anywhere. Go get you a fresh cup of coffee, a restroom, get up, stretch, and we'll see you back in roughly about 10 minutes. I think you need to. Tamara says we're working on the entrepreneurial nutritional poster. I don't know. I'll have to find that out and Google it for you.